Thank you all for joining the session. Great to have you join and be a part of our first AMA. As you can see, there's some teething issues that we're going through, just trying to figure out some new software that can connect us up to many places, so we can live stream into the Facebook group, so we can live stream on YouTube, Instagram, and also record the session so we can post it back after. Nick, great to have you on the session. I saw Andy dropped in, and some new people that I maybe don't know as well that maybe are part of the Facebook group. So great to have you guys here. Now, what we want to do, the real purpose of these sessions, ideally people would ask questions ahead of the session and they can ask into, we're trying to make this exclusive for our Facebook group. So you can ask Sammy and I any questions that you have. As you can see the post up here, and we've got this one starting, which is now. Some really good questions from Andy and Joe in the team as well. I know that second one will be certainly for yourself here, Sammy. If you do have any questions for anyone that maybe hasn't already asked it, I can see one just pop into the chat. When's alt season starting, guys? So if you do have any questions, please fire them through into the chats, and Sammy and I will get moving on this and we'll cover anything off. Now, we can obviously do an overview. I think that Sammy and I do a lot of overviews. So I'd rather go through the specific questions that people have asked, and then we can get into maybe an overview just as a nice thing to do to reward you guys for joining the session at the end. But if you do have any questions, fire them through into the chat as we start the session. So I'll start with the first question here that's been asked by Andy. Andy, if you're, I don't know if that's you or not, there's an Andy on the session. Thanks for asking that question. So just to give a bit of background for anyone else that's maybe not too familiar with what on-chain data is, crypto is a very unique space, and it allows for instant access to so much data and information that helps us to make really in-depth analysis. So it's not just technical analysis, or it's not like traditional markets where they might do their quarterly report earnings. It's almost like you get a constant up-to-date snapshot of exactly the health of a certain company, in this case a cryptocurrency, and you get to look under the bonnet as such with an X-ray machine is one thing that we used to use to describe it, to see and pinpoint, okay, this is where we're at. Now, this is a big thing that we do with the masterminds for sure, where we've really pulled back the information around on-chain data. Sammy and I have done interviews with James Check from, he was at Glassnode, he's just started Check on Chain. He's massive in the realms of on-chain. We spoke to him yesterday, actually, had a session with him. So there's so much value in on-chain if you really understand it. And one of the many indicators is Pi cycle top indicator. So thanks again, Andy, for asking this question. Glassnode's really good. This is tier 1. So I believe tier 1, you get free access. You can upgrade. We've got professional, and there is one that's institutional that we used to have access to, but it's $20,000 a year. And unless you have a full-time on-chain analyst, it's really not worth the value, I don't think. But it's really good because it's got a simple explanation as to what this metric is and what it's trying to describe. And it's all to do with moving averages. So simple moving averages over a 350-day moving average period and a 111-day. And this just signals the different lines here. So you can see this line, which is highlighted, is the 111-day moving average. And this line here is the 350-day moving average. And what's happened throughout history, throughout cycles, when the bottoming of the cycle, when it's maximum fear and everyone's selling their Bitcoin and everyone's running away from the crypto space thinking it's dead, as you can see, we trigger the lower end of this, the 111-day down the bottom. And it's been the same through the bottoming of every cycle. You can see in the time of COVID and even before COVID, and where we went through this cycle, and even to where we're at now, because we are still touching the bottom of that 111-day moving average, and the top has really been helpful to signal the tops of this market. And when these moving averages come closer together, you can see that that's a really peak point of where the market's at, like signaling the top, basically when the 111-day touches or crosses over, which I don't know if it slightly crossed in 2018, 2017. So looking at this, it's just about looking to historical data and trying to predict future forecasts. So in here, looking at this, every time this is crossed, it's signaled a top in the market. And you can see that we still haven't crossed, but the moving averages are coming closer together. And we have the uptrending channel through here right now. So that's in the simplest terms, it looks like we're coming closer to the end of the cycle, but we're not yet. I don't know if you've got anything else to add in particular to this, Sammy. We can even look at maybe some of the other on-chain stuff that we've got marked as favorites that I particularly like, because I think the Pi cycles has been obviously super accurate. As you can see, when it's crossed over through here, it's like, okay, now we need to start preparing for the end of the cycle. Any other comments on this one in particular?
I was going to make the remark that it has been essentially bang on with the cycle tops, and I think I've had this discussion with Andy. Maybe we have, I can't remember. You did ask me a while ago, Andy, but yeah, I really rate this as amongst some others. For me, just looking at it, whenever I do, it's kind of like a lagging indicator when it does cross over. We've had that over exuberance, the peak, and then when it does cross over, it's almost like over the dead cat bounce of the market.
Yeah,
and that's a really good sign, because I don't think you can never pick the exact top, and you also want to give the market an opportunity to actually sprint to another peak. And if it doesn't, it doesn't. And if there's a dead cat, this should tell you. So yeah, I think it's hyper useful.
And other ones to look at as well, addresses is one thing. The accumulation, the shift in holders, like the hodler patterns, who's holding what, and longer term holders always start to distribute to newer holders in cycle tops. So as you start to see the sell-off from a year plus of Bitcoin holding time frame to 3-month or 1-month holders, when you see that imbalance start to happen, that usually picks market tops as well. Are there any other ones in here? I thought I had it on my one. We haven't saved it on the fund one or the favorites, but we had a number of really good quality ones that we would look at. I'm trying to think of
1 year hodl wave. I don't know if you've got that there.
Yeah, the 1 year hodl wave. If I type in hodl, oh, there you go, hodl waves. That's what I was talking about. So this is exactly at the hodl waves. What's the 200-day moving average one?
That's the Maya multiple.
Maya, yeah, the Maya. I don't think
there's another one that's fairly similar to that.
Pretty funny though,
yeah.
Look it up.
But you can start to see the hodl wave and the patterns change throughout here in the peaks of the cycles. So you can see down here the bottom one start to increase, which is the immature investors, if you want to call it that. And the same through the top here. You get big offloads through the 1 year, the 2 year, and even up into the 3 to 5 year. That really starts to shave down, and this growth of the immature investors, the 24-hour, the 1 day, the 1 week, up until really the 6 month really starts to expand. So as this expands more and more and becomes 40–50% of people that are trading within the 6 month or even the 3 to 6 month period or less, that's when it's really helpful for calling tops through that time of market. So do tune in and watch to this chart as well. Well, I don't think the Maya's on here, is it?
No, the other two I was just going to suggest, Joe, which I've just found, the MVRV and also the Pure multiple. Is it Pure multiplier?
Yeah, the Pure, yeah, for sure.
Yeah, that's the one.
Oh, so this is the fair value. So it just divides the ratio of the realized value and the ratio between the market cap and realized cap. So I think it's a powerful one for picking the tops through these peaks where you get the massive spikes up. I thought there was a chart under this one. I don't know if it was
the score. Yeah, maybe.
Yeah, I think the score one was a bit. Yeah, there you go.
Yeah, that's the one.
When it moves into the lower regions in through the green or the peaks. This is a T2 on-chain metric, so you will need to upgrade to the premium or the professional to have access to this one. But this is a really nice one. When you touch up, as you can see, it's picked it every single time. We are so far
Hey, is it Sunil?
of being into the higher levels there. So do review some of these on-chain metrics. I'll jump into and thanks again, Andy, for that question. Sammy, this is a good one for you. I do have the M2 pulled up so I can have a look at this. But Joe asked around the forecasting of global liquidity peaking and how it might impact the crypto space. So let's have a look at the M2 monetary supply for the US, because I think that's probably the key identifier of what has happened and also the impacts of what it's had. Like through COVID, you saw the crypto run through the 21 into the end of whenever it was, November 21, through that time frame. I think, as you can see, the M2 monetary supply just exploded with global liquidity, and that therefore meant that there was a huge run in the crypto space. So where do you see this at, Sam?
Mm-hmm.
And what's your forecast for when does this really start to ramp up again? Because I know that there was a bit of a reduction, and now it looks like it's expanding again, and maybe even in comparison to China as well, because I know that they're going on a printing spree as well.
Yeah, well, I mean, I don't want to say this time's different, but we just have to look at historical cycles, and funnily enough, Bitcoin lines up with global liquidity cycles, the halving. So we're actually entering in a new liquidity cycle now. So if everyone just sort of tracks back their mind, the last 24 months, we've gone through one of the most aggressive rate hiking cycles and the reduction of liquidity globally that we've seen probably since the 1980s. So we've gone through a very restrictive period. And now we're heading into, and I saw Nick posted in the chat, what is banana zone? We're heading towards the banana zone, which is a lot of these sovereign nations and central banks are becoming unhinged. The value of the capital and the currency and the debt is decoupling from reality. So I really think we're going into a pretty crazy period of debasement and expansions of M2. We're already seeing that in China. Their monetary supply is expanding at quite a clip based on their economy just sort of going through the floor. So they're trying to hold their economy together by selling US treasuries, getting US dollars in, and also debasing their own currency. The US looks like they're going to do the same, but over a slower period of time. So yeah, I think we're heading into that liquidity expansion now. And I would, if I'm going to speculate, forecast out, we're going to see a pretty standard time scale of that expansion, 2025, 2026. And then I think we hit that sort of the bear market of the global liquidity again, where inflation will rear its ugly head, because all these central banks are going to be expanding monetary supply, and then it's going to be like a whack-a-mole game of inflation, like we've just seen come out of nowhere after they come out of nowhere. I say an asterisk, after they print a god-awful amount of money. Now they've kind of done the best they could to crush it. Expansion is coming. Inflation will come back. They're going to have to try and tighten again, which will, I guess, line up again, you'd think, with the next bear market of risk assets, probably in 2026 or back into 2025. And we have to think as well, if the US goes into a recession or the world moves towards a recession, that will release the floodgates on more liquidity. So I just don't see this slowing down. And again, I think we're heading into a period of a fairly loose monetary policy, just because they're forced to do it. But it's not going to be, I think it's going to be up and to the right on the chart, but we're going to have some road humps along the way every kind of 4 years. Hopefully that answers your question.
In terms of the interest rates, Sammy, because obviously that's a huge one. If we're having a monetary expansion, do you feel, given that there's a forecast of cutting interest rates into September, what impact do you think that will have? And it looks to be reducing further and further, but yeah, the cuts seem to be potentially on the horizon, but they seem to be getting pushed out. The longer these get pushed out, the longer the bull market will eventuate and continue to go. And it really does look like it doesn't want to. It might even push past September now, which would be really interesting into the back end, like right at the back end of the year. But when interest rates start to turn over, naturally, we believe that there's going to have an impact on the market. Maybe share a bit more insights around this.
Yeah, so I think we've been on the edge of waiting for these cuts for a long time, and they just keep being pushed out. And you're right, it's kind of like a Goldilocks zone for risk assets. If we just sort of maintain this status quo of limbo, where we know they're kind of coming at some point, but they're not happening. Risk markets just tend to like that environment, because we've seen historically with it, as the minute that a rate cut hits, stock markets, risk markets, they just fall over, because then it's psychologically priced into investors, especially in the stock market, that a recession is here, or growth is slowing. So that means companies are going to have to lay off staff, the revenues are going to be down. Then there's a sell-off in those stocks, because you don't want to own a company that's going to have to go through hard times and going to tighten their belts. So generally that's a time for offloading. So we just don't see yet that crypto is going to decouple from that kind of situation, being that speculative risk asset class. Bitcoin might, but it's too soon to tell. Bitcoin and gold are kind of an interesting one. And Bitcoin is correlated to the stock market when it wants to, and when it wants to do something else, it will. And we've seen, like, last 12 months that it kind of coupled with gold around instability, banking crisis, and economic instability globally. So it kind of ran it in that environment. So it's hard to call, and we just don't know the effect that it's going to have on crypto. But I would speculate that broadly, crypto being that risk asset class, it is going to get hit by a reduction of liquidity in the short term, and Bitcoin. Yeah, I'm leaning that it's going to have an effect in the short term. And then will be a very big dip to buy. That's my feeling.
So I don't know if anyone saw on the screen, I just made a custom ticker by putting BTC USD / and I put the S&P 500, or maybe that didn't. I think that is. I don't know if it chose SPX. Maybe it did. But you can make the custom tickers in here. Let me change that. Let's see if it goes S&P, which is really, really clever. And that allows you to see the performance of Bitcoin against, yeah, that should be right, Bitcoin against the S&P 500. So it's a really, really cool way of creating this. If you're ever wondering how is Bitcoin performing against the S&P, then go and create your own custom ticker in here, in TradingView, that is. Sam, I've got a question from Nick. There's a global M2 indicator in TradingView. Do you use that for liquidity pumps? I just come into trading economics to look at M2. I don't really follow that super close, because it's more of a monthly overview, but not sure if you use anything there.
No, I don't know the source of that data, so I don't use it on the chart. I'd look at the Federal Reserve website. I think it's Fred. They give the data on the US M2. Global M2 is a little bit different. You have to go to another website. I cannot think off the top of my head, which I can pass on to you, Nick, to have a look at that. But it's all based as well on, what can I say, what the central banks, the data that they're actually going to give people. Because we noticed that the Federal Reserve, they showed, I can't remember, was it M1, M2, and M3, and they all show you different stuff. Like M2 is a really interesting one, because it includes like bank deposits, savings, all the liquidity essentially in the system, all the money, the monetary units in the system. And M3 includes other things as well, but it was looking so outrageous, up, just expanding, that the Fed stopped reporting on it, and they stopped showing people that. So again, I think it's kind of like a guessing game, but that they're debasing the currency. M2 is going to expand, and Yeah, the more, and this is the interesting thing. I don't think we're going to see just outrageous, stimulus and overt QE in the market, because the media is too much on that. The public is getting a bit too smart for that. They'll go, well, you're printing all this money again, blah, blah, blah. So they're going to call it something else. They're going to label it something different and do it like that. And liquidity will find a way into the system. And I strongly believe what we're seeing at the moment is a lot of the liquidity that they have done, not via M2 expansion, which is so overt to everyone. They've gone through the banks. So if we saw when the banks were going through a really hard time last year, and there was some Silvergate and a couple of others that went under Silicon Valley Bank, the Fed actually created a banking facility, the BTFP facility, and all the bonds that these banks were holding were just getting trashed. And a lot of banks were going to go under if the Fed hadn't created this facility to give them emergency loans to stay afloat. So if banks are staying afloat and there's some confidence within the banks will start to create money out of nowhere and loan that money out to essentially you and me. And that creates new monetary units. So liquidity was leaking into the system via that facility. And that's essentially, in my view, why we saw a really big uptick in the stock market, and liquidity was just moving still out in the market, even though they weren't doing QE. So there are other ways they can do it.
It's the same thing, just repackaging it in a completely different way.
Because banks create money. Like, not only does the Treasury and the Fed have a way of doing it, because the Treasury likes to spend. The politicians, they come out with policies that they need to get funding for, and the Treasury will do X, Y, and Z. But the banks, they essentially are the more that provide the direct stimulus into the economy, because they can create loans out of nowhere, which is creating money. And then you go out and spend it. You buy a house, you buy a car, whatever, and you're putting it out in the economy, and it's creating more monetary units. So yeah, that's how they do it.
Crazy stuff. So I've got a few questions. I don't know who this is from. It might be Joe. When's altcoin season? There was also a question around the meme cycle and how do we know when we should sell? So I think we should probably start with the altcoin season. That seems the most obvious and direct one. So I've pulled up the Ethereum Bitcoin chart, and this is a really, really good indicator. So you can see mapped out on here, early altcoin season. This is like altcoin season's absolutely peaking off the absolute charts. This is one chart that you can look at, which I'll get back to. And this is the other really good chart. So you can see total 3, it just excludes, I've got the Wall Street cheat sheet on there. It excludes Bitcoin and Ethereum. So it's all altcoins outside of that. And seeing the performance of this, you can chart this as well, seeing if it's getting outsized performance against the total market cap, including Bitcoin, or excluding Bitcoin and including Ethereum into this chart. Look at the performance gains and the difference, and that will help you to see where we're at, where we've been. So this is the peak of the cycle back in 2021 in November, when alts were really popping off. Where are we to that stage? Well, my favorite chart would be the Ethereum Bitcoin. Now, there may be some potential distortion with this because of the Ethereum gaining strength, given the recent ETF announcements and approvals. The flow will start very soon. I had my thinking pattern, my logic behind the Bitcoin approval was that proxies to Bitcoin, like stacks or BRC20 tokens, anything that was developed or built around the Bitcoin network was going to thrive, and it did. And I expect that the monetary flow through the Ethereum network into others like the layer 2s, etc., that are built on the Ethereum network will start to really gain shape. And that's when you'll get your real pop off in altcoin season. I think we're potentially at the inception / already started with some of the altcoin season after the strong pullback that we had. You have to remember some of the really good quality alts are still 50% down from this stage. So I think that the opportunity is now. Watch out for the buy the rumor, sell the news with the Ethereum ETF flows. Will we see a really strong move like we have in a continuation of this into the ETF, then a pullback to shake out investors, and then a regrowth from there into the real bull cycle, altcoin mania. Ethereum's been Bitcoin by 24%. So it's gained 24% more strength on it over the last 10 days or 13 days. It's been performing incredibly well. It's now broken above the 50-week moving average, and the 200-week is my point where I'm saying, okay, now we're in full altcoin season. / I want to be in a lot more Ethereum than Bitcoin, which I've already started that transition. When we finally broke through these levels in the 21 and the 10, that was my sign to say, okay, now I want to be heavily allocated in Ethereum and Ethereum proxies, which I am. And meme coins are absolutely a part of my portfolio. I said in a video recently in one of my Friday sessions, because I saw someone who's an influencer, you might say, in the crypto space, saying not to invest in memes. And I went out in a video and I said the complete opposite. I said, if you don't invest in memes, you're mad, because they're the highest performing assets right now. You just have to build out a clear strategy in order to get the outcome that you want through it, because they are highly volatile. So yeah, I think there's opportunity here. When we cross over here, this is where I expect we'll get a really strong move up into the peak levels of the altcoin season, which will come most likely through the forthcoming 6 months, I would say, until November time, when the interest rates might start to cut. We can watch monetary supply, and that will help us to really determine this. Sam, have you got any points that you want to specifically say on this before I start talking about meme coins, and then I'll go into knowing when to sell or how to sell?
Yeah, we normally see the zenith of, alt seasons when Ethereum is, popping and breaking out. And right now it's still in a downtrend against Bitcoin. Like you said, Joe, you're not really getting too aggressive until it breaks that upper bound of that channel. And I'm very much in that mode. So when you've got that line at the top, alt season, what that actually signifies, guys, is a new cycle high that ETH has made against Bitcoin. And every cycle previous, when Ethereum has made a new cycle high against Bitcoin, it's in open air, it's breaking out, altcoins are just popping off. So that's kind of the rationale behind that 0.08 level. And it's such an important level, because that's when I think the craziness in banana town or banana zone, what Nick's described, Raoul Paul likes to talk about, where I think really pops off. Also, I would be watching Bitcoin dominance, guys, because if Bitcoin dominance is not breaking down, Bitcoin is sucking the capital from the altcoin space. And it's been in an aggressive uptrend for a very long time, just like it was last cycle around this same time, where Bitcoin wants to just run through new all-time highs, go from here maybe up to, 80, 90, 100,000, and just suck the dominance out of the market. And I think it could get to 60%. I just want to be cautious with that. But if we see a breakdown of dominance here, I think beneath around the 53% level, and we see bearish divergences on the weekly play out, then altcoins, by this very chart, Bitcoin will lose dominance. So that capital is going somewhere. It's going into either altcoins or stable coins or whatever. So then they start popping off. And you see at the bottom of the chart, and I think we mapped this out a while ago, Joe, was the crypto bear market's all the way at the top, when Bitcoin's kind of, and this was a different point in the cycle, Bitcoin dominance is at really, really high levels. It's either surging really, really hard, or we're in a bear market. And when the dominance is really low towards the bottom, we're in a altcoin mania phase. And you can see the bottoms of the 2021 altcoin mania and also 2017 in that same region. And I might just add as well, like, one of the biggest mistakes I've seen investors make, and I made it to a degree myself with the Bitcoin ETF, was I positioned heavily for the Bitcoin ETF, but I don't want investors to get caught with the Ethereum positioning like that, because we were thinking, but like you said, Joe, that those side chains, the Staxes of the world, the layer twos, we're going to significantly outperform like a leveraged or beta play. But it just wasn't the case. Memes were the ones that were kind of outperforming. The proxies or the L2s did outperform in segments, but it didn't really give you that extra leverage. And in most cases, you're better off just staying in Bitcoin. So with ETH, because we're thinking this ETF, that capital is running into this almost walled garden in Wall Street, it's not really filtering out that capital to the rest of the market, straight away. So I just want to urge a bit of caution. That the most obvious play here is Ethereum, like it was with Bitcoin. So, look at the lowest risk, high conviction asset first before you start adding all this additional risk by just throwing money at a whole bunch of different altcoins. So I just wanted to throw that out there.
And the best way to do that, as you can see on the right, I've got Ethereum pairs. So if I'm trading something or considering trading it, I want to make sure that it's beating Ethereum. And if it's not beating Ethereum in its strength, like as an example, Arbitrum has just been smashed against the Ethereum strength, and at some point it will bottom out and come back. It's almost at the point of no return. It couldn't be any more oversold, and that's why we think Arbitrum is a really good opportunity as Ethereum starts to come to life, and it's had a nice 20% move in recent times. So that is a really good way, like AGIX as an example, looking at what's the performance of AGIX against Ethereum. It hasn't been beating it recently, so don't hold it. But do look for when this starts to turn, because if it does turn, then you're better off transitioning some of your Ethereum into AGIX as an example. So get really aggressive on either holding Ethereum or something that's beating Ethereum, or something that looks primed because it's bottomed out and now is the time to make that play back into it. And you can see the same. I've got loads of stacks, not stacks, BTC pairs against stacks, against Solana, AGIX, Arbitrum, ICP, Shiba, Pepe, whatever it is, to see. And that's why, like for me, stacks is a phenomenal play still right now. I'd rather hold stacks than Bitcoin, even though obviously I hold a very minimal amount of stacks still, because I'm waiting for this chart to really start moving. But this could be optimum levels, 0.786, sitting on key weekly resistance. I know on the Danius, on the 200 as well. So it's just primed. Sorry, not on the 200. I think maybe it was on the 4 hour or something. It's just primed to make its move now, but you have to be patient. And again, if it's not beating Bitcoin, don't be in it. Or if it's not beating Ethereum, and you can make the custom pairs for this. So that's a really good way to signify it. Let's talk about meme coins. So I've been doing incredibly well on memes recently. I know Andy has been absolutely crushing it on memes and singing from the hilltops about it. So great work on that. I was trading Pepe heavily, and I had targets up here. So 1900 and I think it was 2000 were my targets. Now, I watched and watched and watched this, and I saw this overextension, a massive bearish divergence forming, where the strength of the RSI was just going south and the price kept going north. This was telling me momentum was turning over, and I sold all of my Pepe, and I moved it all into SHIB, Doge, and Bonk as well across these three. And SHIB has been a massive performer as of late. I had this target zone. As soon as it crossed this, I wanted to be in the trade. So I crossed that, broke out, and I moved into it. And it was a massive move. I traded that last night. So that's a 8.5% move in less than 24 hours, which has been phenomenal, considering Pepe's gone down a couple of percent, which is, I think there's a meme coin rotation going on, and I think there's huge opportunity, and I wouldn't want to be in Pepe right now, given the way that this chart's looking, but I think there's clear opportunity. Bonk continues to go bonkers. I think there's risk with that, so do be careful. But I think there's definitely an opportunity of continuation. That's built on the Solana network, and Solana's having a bit of a nice move here, so that's why it's got some performance. Doge is the blue chip, so watch this, see where it goes. I've got some stop loss levels in place, and I've also got some targets in place of what I want to achieve and where I want this to go, which is 19.5. If I zoom out, I don't know if that's the 1.618, I think it might be. No, it's the Fibonacci retracement from the top down. So I've just done a Fibonacci retracement of this move, and
that's really close.
Yeah, and to see where we're at. And this just seems like a logical target. I go in here and I set alerts for everything. So I name them OCO profit level hit. I know the target, and I set the bottom end as well, the targets. Doge stop loss hit and stop loss 2 hit, because I've got multiple stop loss levels on it, because I'm running OCO order splits. And yeah, SHIB, I've got a nice amount of targets on here, multiple OCO orders, because I just think it's highly speculative. So I want to be removing as much risk out of the market as I can, and then looking to rotate. Personally, like I invest a minimum of quite a large amount into any trade that I do. So I need liquidity. You can go into some of these hyper speculative ones that are out there, dog with hat, or all these crazy ones that I'm not too afraid with because the liquidity is so small. If you put $1,000 in, cool, no worries. But if you put a minimum 50 to 100, then you might find yourself in a spot of bother when you try exiting the market or setting a limit order or anything like that. So just be aware of that. But I think there's huge opportunity in meme coins. If you're running a high risk profile, 15% into memes is good. If you're ultra high risk, you might run 25, 30. I'm sure some of you are running more than that, and I'll block my ears because I don't want to hear. But it really does depend on where you're at on your crypto journey. If you've got a really good stack of cash in crypto, you want to take less risk. If you maybe don't have a ton of capital in crypto and you want to try and fast track some of that up, then memes are where it's at. And you can see that on here. Memes, if we look at the memes here, SHIB to BTC. If you look at, I don't have one on there. I can create the custom pair. I'll show you again how to do that. So if I go bonk, oh no, sorry, let me start that again. So if I go bonk and then I go /, what do you want me to compare it against? Maybe Ethereum. So I come in and choose Ethereum like that on Coinbase, whatever. I come back to bonk and I choose this one. Then it will give me the chart of bonk against Ethereum. And I can see a smash in Ethereum. So I'd rather hold bonk than Ethereum. So you can see how this works. It doesn't bring up all the monetary metrics. I don't know why. I think there's a problem with the extracting or the crossover of numbers, but it gives you all the momentum indicators to show if it's overbought or where it's sitting. And I just like bonk looks so prime to me through here that it just wants to have a continuation. So on here, there's different things that you can do. So you might come in and grab a Fibonacci extension from here and move down to there and say, okay, it looks logical that we have a 1.618 level move up to here, and you can come in and set an alert to then go and trade directly into Ethereum, because you can't set the trade because I don't think bonk ETH is a pair on Binance. So really, really cool stuff. There's so much that you can do in TradingView when you understand how to use it and how to get the most out of it. But I see this as a really nice opportunity as well. So you can hold a basket of memes, but just don't go too wide, because I think if you accumulate too many meme coins, it can really become a bit of a problem trying to manage all of that. Sam, anything that you want to add in terms of what I've shared with the meme side of things?
Yeah, just be careful with them. Like there's such a great opportunity, but you need to be onto it like you've done with alerts and having a plan. I like to zoom out as well. Like SHIB, I personally avoided being in memes until I saw the right setup. And I went really hard on SHIB this morning because I saw a technical breakout. And you understand as well that memes have incredible volatility. So, you know, if you see a really good setup and you time it right, you can make it not an easy, but you have a good opportunity to make 10, 20, 30, maybe even more % if they go really hard. And I think that's why they build such momentum when they have a breakout. So as a short-term trade, it was definitely on. Longer-term investing, I think there is merit in, you know, sort of building out a portfolio of lower risk memes like, you know, Dogecoin, SHIB, you know, and Pepe. There's always going to be new cryptos that really capture the market, and you can see by their market cap. My feeling though, guy, like Joe said, is just be very careful with how far down the rabbit hole you go, and liquidity matters. If you're buying just a random meme, and as well, another layer is the saturation of how many tokens and meme coins are popping up every single day. There is only so much capital out there, and this liquidity will move around very, very quickly. So just manage your risk. And if there's not a lot of liquidity when you go to CoinMarketCap and load it up, or you look at it on the exchange, be very, very careful, because you might not be able to sell when you really, really want to.
I've had a question from Joe around Miro. I actually, yeah, I don't know too much about Myro. It looks like it's just another meme that has
This dog.
Myro, the dog named after the Solano.
What was I just saying about how many meme
Raj.
coins are popping up every day?
Yeah, that's the challenge of this. This is obviously built on the Solana network, so I assume that if Solana performs well, this will get some attention. In overall, where's the market cap ranking? Where did I see that? I don't know if you can
258.
Is that where the market cap ranking is?
Is
Oh
that
yeah,
too
sorry,
low?
yeah, that is. Yeah, so 258. The volumes there, look, 50% increase almost in the last 24 hours, 106 in terms of not market cap, but ranking with volume, which is a positive thing. This could be a short-term trade. 94% in circulating supply, which is really good. It's got high, it's almost fully diluted, which is a really positive thing because you don't want to get token unlocks that dump on you. Just looking at the 24-hour volume, where is it? Bybit, it's a good credible exchange, 14.3 million 24-hour volume, which is okay. I would say it's fairly low, but it's still okay. And across different exchanges as well, which is nice to see. It's on KuCoin, it's on Gate, HTX, some fairly significant exchanges. If you are trading it, I would recommend trading on either Gate or Bybit. I hate Gate. Gate's the worst exchange in the world. So maybe you want to, or maybe it's not the worst, but it's one of the worst. But Bybit's, it's not designed well. But Bybit's a nice exchange that you can use. But yeah, again, be careful of that. In terms of looking at the chart, it does have, when was that? So that's from, so it's got a fair amount of, it's almost 6 months old. I don't know if it was created 6 months ago. It's just the data that I've got on this chart. If you go to all, okay, so maybe November last year. So maybe it is about 6 months old. Very volatile, is moving in the right direction. On the daily, it's definitely getting into that kind of overbought territory. It will still have a bit of a move. I like to start wide and narrow in. I don't even think you probably won't even get any information out of the weekly, no, not even. So start on the daily, Joe, and just narrow in if you are looking at from a TA perspective. Gets these huge moves up, which just lead me to some kind of questions of, is this like a pump and dump because it's got such low liquidity levels, which may be improving. Looking at a Fibonacci retracement, yeah, look at that. I love the 0.786. If you just bought off the 0.786, I think you'd make some seriously good calls with this. Structurally, it looks okay. I would say that it's probably getting close to the end of its little foray that it's having through here. I'd be a bit concerned. I would run OCO orders on this, is what I would do. I would probably have targets of this level in here, which would be, what would that be in terms of a move up to there? So 12, 14% move. You could run another OCO up to the top levels. I probably wouldn't go to the wicks. I'd probably go to those, the candle tops through there, which could be another move, but also look into the lower time frames as well. So the 4 hour, yeah, the 4 hours definitely got there's a clear bearish divergence forming in there. So the price is running up and you can see the strength of the move is coming down. So as soon as MACD turns over and the stochastic turns, I think this will have done its dash. It may squeeze a bit more. RSI can come down and it can reset and move up again, like it almost has done through here. It reset on this level. It's had a move up. So as long as there's a continuation, but if it does start moving into the 80 zone, then I would probably look to sell off and go back to the historical events as well. When it had these big moves up, it peaked into 77, peaked into the 80 region, and that was really near the top. And then, as you can see, it just downtrends through here. And this is where it's just the point of almost no return, where the price continues to have these pops, but the strength of the move is clearly down. Look at the MACD turn up and then turn down. Look at the peaks in stochastic as it peaks up and then drops right off. Don't really go any lower than the 4 hour, I would suggest. maybe I like to go to the hourly only for picking real specific entries, or if I want to see if I'm buying maybe something near the top, and maybe I should set limit orders lower. But yeah, generally I just say be super careful with these kind of cryptos. Do I think you're better off maybe investing in a SHIB than something like this? Probably, but again, SHIB could be getting near the point of being overheated as well, and you might want to watch that. Yeah, to see. On the 1 hour looks like it's topping out. It might have a fine strength here and continue up, or this could be showing that it's near the kind of final legs of the move here. So do watch this, because I think people are cycling very quickly through these meme coins, one performer into the next. You can see 4 hours peaking, the 1 hour's peaked and it's turning down. So yeah, SHIB, unless it gets some strength in here and rebounds, then I'll be taking my profit off the table on that. So good question in there. Sam, anything you want to add to that one before we move on to the next question?
No, not really. Maybe just the fact that on Sol, if Sol's moving higher, you know, these meme coins should do okay. And if Sol's showing any kind of weakness, it's kind of affected exactly by the big daddy, whatever chain it's on.
Absolutely. I sold all of my Sol, not my actual Sol, my Solana, because it just got destroyed against Ethereum. And I thought, why would I want to hold Solana when I can hold Ethereum with everything that's happening? But it looks like now it's a really nice rotation from Ethereum into Solana, and that's probably why Bonk and Myro, or whatever it's called, Myro, and some of the other memes on the Solana network are probably better performers than something like a SHIB that's maybe made its move now and you can rotate out of it. So good question there. Vanessa, question from yourself. What about Chainlink as the oracle of real world assets? What's our thoughts on long-term performance of it? That's in our top 10 portfolio, isn't it?
Yeah, it is.
Yep. Yeah.
No, it is. I actually put it in my altcoin Bible today as one to watch, but it could have very well been a cherry ripe. I had SHIB in front of me, so I'm like, that has to be cherry ripe. But Link, if you go to the chart, Joe, and hi Vanessa, I hope you're doing well. Link has essentially done what SHIB did. It broke out of it, flipped a key resistance level back into support, which was a key demand zone back earlier in the year. It looks really nice. So that level, I think, was just a bit higher, Joe. If you just go a little bit higher from that, just a little bit higher, a little bit higher. Yeah, around 17.5. So the breakdown level from that that's oscillating on top of the roof there. It's reclaimed that. So Link has this funny thing where it literally can just go sideways in this chop. It's the perfect range bound coin. It's frustrating as all hell. But when she does make a move like that, that's a key flip of resistance back into support. So I think this, as long as that level holds there, she might retract a little bit towards those moving averages and that key support. I think she's actually really good to go high 20s and move into a more of an expansion phase. There is a bit of talk about Link. Fundamentally, I've seen on Twitter some positive news. So technically it supports that idea. I would get pretty concerned though if this is a deviation and it ducks back beneath that level and then starts to lose some of those moving averages. So yeah, I like the look of Link.
But yeah, on a fundamental front, I think that it has some really good alternate blockchain opportunities, focus in comparison to competitors out there in the market. So it has a really good proposition, especially in the real world asset space as well. So yeah, good opportunity. See how it moves, but again, don't get married to anything. You might have a small allocation that you increase in your long-term holding, and see for other entry opportunities, which I would put a limit buy in here, and I would run a stop loss probably under here or even under the 200 on it. It's got a lot of support underneath. And that's how I'd make a move on it. Nice one, Andy. 35% in memes. You're laughing all the way to the bank at the minute. So good work on that. Let's see. Do we have any other questions here? Okay, I think
Vanessa has one about.
here we go.
One.
Looking at the weekly chart on Sol, still a good investment entry, or is it too late? Let's have a look on the weekly for Sol. I start wide and narrow in. You go through Sol into the other ones. Weekly, yeah, I mean, it's had a nice reset there. It's come down and reset on the RSI. MACD's looking fairly high level, but it's probably not the best chart on Coinbase. I'm sure there's much more data.
I would just say as well, Vanessa, like looking at that chart, looking at what Sol is and the users it has, the eyeballs it has on it, the liquidity, the market cap, and the narrative, the community. You know, you look at the weekly chart asking if it's a good entry. I mean, we look at 171. You know, this is a coin that could easily, if you look at the market cap, could easily get to $500 to, you know, $1,000. So I think you have to look ahead where we are in the cycle currently, and maybe not step so far into the noise of the short term, step back a little bit and have a look where this thing likely goes based on the bull market, based on, you know, retail participation and how many memes are just popping off on it. So yeah, and that's helped builds investor conviction, because if we're constantly being pulled around, like Joe had a great promo we had out recently about being on a roller coaster. If your portfolio, if your emotions, it's just making you feel like you're on a roller coaster, it's likely because you don't have a plan or conviction of the longer term game here, which is so important. So I wanted to share that. Yeah, absolutely. Really good point there. Yeah, I like the Fibonacci extensions. I think they're golden. 1.618 through here, $420, I think is a very easy ask of Solana to get to those levels. So now that ETH has had its pop, I've got a fat tongue today. Now that Ethereum's had its pop, I think that Solana may get a nice run. Ethereum might cool off here, I expect, into maybe the actual ETF flows. I wouldn't be jumping around too much, but if Solana's beating Ethereum here, you might want to transition some of your SOL into Ethereum and also into some of the Solana-based. Can I just add there as well? Like, guys, imagine if you see how this plays out on a longer term basis. Bitcoin has its ETF, Ethereum has its ETF. We've got a pro crypto potential president coming in Donald Trump and all this kind of stuff, and we get an SEC clean out. What happens if we get the speculation of what is the next ETF? What if it's Solana? What if it's Dogecoin? You do what I mean? If we get any kind of news around those kind of terms, some of these could just roll into the stratosphere. So have that in the back of your mind as well, that, you know, I just don't think we are bullish enough for what is coming. So
yeah, I completely agree. Nick, your question around Solana ETH chart, now that it's breaking out, would I rotate back into it? Absolutely. So I have actively traded and I have long term. My long term, I don't move around too much, although I did sell Bitcoin into Ethereum recently and bought some other cryptos that then I moved into my longer term. With active, I have some active Ethereum and I would happily rotate into Solana right now, no problem. Solana and maybe top up and get myself a bit more bonk. So I do transition into and out of with my active trades, which is 40% of my portfolio, 60%. I very rarely trade unless it's obvious, like the Ethereum announcement is an obvious trade to transition. So I'll park some of my Bitcoin into Ethereum. That's a no-brainer, and I made 25% off that one trade. So it's, yes, you should and can trade it. But it depends on your skill level. It depends on where you're at. I'm not doing a ton of trades by any means. I spend a lot more time planning than trading. But if I see an opportunity, then I want to take it. I'm not going to sit here and watch something rip against another asset that I hold and do nothing and sit on my hands, because that's not good investing, right? So if Solana wants to present the opportunity, I'll take it. And it looks like it is. So I'll be interested in that. Sam, any comments that you want to share? It looks like we've got to the end of the questions in this session. But yeah, any comments or any words of wisdom that maybe you want to share to close out the session?
Keep an eye on the big picture here. We can get, you know, a bit bearish looking at, you know, sometimes when we break some short-term levels. I just think we just need to look at go back before the Bitcoin ETF announcement and what it did for Bitcoin, and all the people that when it got to 45,000 and whatnot, trading the launch, you know, buy the rumor, sell the news, got caught up in all that kind of stuff, and we're in and out of positions and trading leverage and getting absolutely wrecked. If you have that longer term focus and that high conviction, you'll go to yourself, all right, well, Ethereum is at, you know, X price now. Where do I see it going in 6 to 12 months time with institutional flows coming into it? I personally think that $10,000 USD Ethereum is programmed. I think that's happening in the next 12 months. It's not going to happen right away. But if you have that kind of longer term outlook, and I'm not saying 10,000 has to be it, but I'm saying it's going to move towards that and maybe even higher. I wouldn't be surprised to see it pop up a bit higher than that. But just have that view, guys. And I think this is a period as well to try and settle yourself as much as possible. Sit on your hands and kind of and I hate saying this, but surrender yourself to the market and stop trying to chase every single thing that you see, every kind of narrative. And have the overall portfolio and your construction in your mind, your conviction very well set, not in stone, but a foundation framework that you're comfortable in leaving for a certain amount of time, your medium and longer term stuff. Active, like we've been discussing. I went and traded SHIB this morning because I love the setup. I just went in and traded it because it was an opportunity. But if I hadn't seen that, I would have been very happy just staying in Ethereum or staying in, say, an Arbitrum, because that is the prime narrative here, and I'm not getting pushed off it for any reason whatsoever unless I see something that is going to outperform that. And then you've got your Bitcoin and, you know, the longer term bet on that. So yeah, I think just do less. Do less. This is really, really important. And I think a lot of investors are maybe forgetting that or unsure of what to do at the moment. They feel like they need to be doing something. We know that might not be the correct way of going about it.
Yeah, really well put, Sam. In the newsletter release for tomorrow, under one of the sections, I said, trade less, hold less cryptos, have more conviction.
Yeah.
That's it in a summary. Cool. Thanks so much, guys, for joining the session. Really appreciate you being here for our first AMA. Hopefully this has gone live somewhere. We'll see. And hopefully I've recorded it too, so you can watch the playback. I don't know. Technology gets the better of me sometimes, but there we go. Anyway, thanks for your time, guys, and catch you all soon. Take care.
See you, everyone. Pleasure.
Bye.